Good evening, everybody, and welcome to another edition of Live Market Analysis Monday night. Where else would we rather be than sitting here on Google Meet discussing markets? And what an interesting time in markets it is. It was fun there for a while, for but a fleeting moment. We'll talk about all of that and more after we talk about the disclaimer, which says that everything we're going to discuss tonight is general in nature, has not taken into account your personal financial circumstances, objectives, or particular needs, and therefore it's very important you consider all this stuff carefully before you act upon it, or even better, seek the help of a financial professional to determine the appropriateness of this information for you. It's also important to remember that, hey, markets go up, markets go down. If you invest, there's a pretty good chance you're going to lose money at some stage. Ultimately, it's always you and not me who's responsible for the stuff that you choose to do. The agenda for this evening is pretty simple. Send in your requests. But the reason why I say this every week, some people go, hey, Carl, why do you say this every week? I know we've got people joining us all the time. So for the new people that are joining us, welcome to Live Market Analysis. And the way this works is you type in the stocks or crypto or indices or commodities, anything I can get a chart on, I'll give you my best technical analysis, a reader on. There's no fundamental analysis here, just in case you were wondering, or it could be anything about trading. I generally label those into the 3 M's. So the methodology, that is how you get in and out of the market, the money management, how much you risk when you do, and your mindset is how you think about it all. Let's head over to the Amy Broke screen, where we'll kick off with our customary portfolio management model. And you know, we've been sort of flipping and flopping in a good way between what's on screen here, the Nasdaq, and the Russell 2000, and maybe with a twist of the ASX 200 as well. But what we're trying to do here is understand not whether to buy or sell the Nasdaq composite, although some of you may wish to do that through ETFs or CFDs or futures or options, but more about how much we're going to risk of our capital. And let's say, hypothetically speaking, we had $100,000 in our trading bank, and Carl said something like, oh, I don't like the look of that. I might take a third off the table. Well, it's basically, it doesn't mean you run out and sell a third of your $100,000 portfolio straight away. We're going to start moving towards having less risk if possible, and we would continue to do that until we got to the point where we only had 2/3 remaining and a third in cash. Why are we doing that? Because we see something here which we're not so sure about, and we think it's better to not be fully invested at that point in time. We might then go to only a third in the market. We might then be zero risk position, completely out of the market. Where we last week, from memory, I think we were okay. We're hunky-dory. We did notice that the Nasdaq had a big black candle potentially. We obviously felt that indicated there's some supply here, but we also put it down potentially to the rotation that was occurring between the mega cap technology companies, the Magnificent Seven as they've come to be known, and the rest of the market, the smaller and mid caps. And I looked at the Russell 2000 as well. Since then, the Russell has continued to rally, and then in the last 3 sessions, obviously it's been 5 sessions since we last spoke, so 2 of those were tremendously up. And the 3 most recent ones, I wouldn't say tremendously down, but certainly undoing much of those 2 winning candles. And in fact, we have some pretty nasty stuff going on here. I mean, we've got that candle there, which in itself is completely innocuous, mostly innocuous. It is still the demonstration of excess supply, because the only way you can get this candle is if you start by going up. That's how that long shadow up the top is formed, and then the supply comes in. Why the supply comes in, look, we'll never know unless you go and survey everybody who's supplied. We'll never know why they came in. It was something to do with this old point of supply in the past, because we know that historical points of supply, it's this one here. I know because the scale will change, so it gets a bit confusing, but it's this one here, and it's actually a pretty significant point of supply from the past. This was kind of that last gasp rally after the major top back in 2021, and we literally haven't been there since then, and that's in all the way back at the end of 2021. Here we are, nearly at the end of 2024. It's incredible to say that, but it's true. So it's been nearly 3 years. It's a pretty important high, and maybe, and I say maybe because we'll never know. It's just a guess. We saw some supply up there to create this candle here. Demand backed away a little bit. Maybe they were thinking, hey, look, there's a bit of supply up there. I'm not going to be the last guy that buys right before supply. I'm just going to back off a little bit. Supply takes over, and we get maybe a little bit more selling the next day and the next day for whatever reason. We'll go into some of the reasons when we do the whip around the grounds. Bottom line is, should we respond to that with a portfolio management move? I'm going to say, hey, those three candles are not good by any stretch of the imagination. But the short-term trend is still up. The long-term trend is still up. I think we stay the course, but clearly we can expect a bit of turbulence. Okay, a bit of turbulence. The trend is still fine, but there is going to be a bit of turbulence. Hey, nothing would surprise me less than seeing a big white candle pop in tonight and just the trend continuing. So I don't think we want to panic just yet, but we're going to look at the signals here and say, something's not right. If we only use the Nasdaq, I think we'd probably take a stronger move. If we were only using the Nasdaq, I think we'd take a stronger move. Let's bring it back home to Australia, and we can see again that there's no real desperate need here, I think, to push us off our full risk position from a portfolio management perspective. But, you can tinker around those themes and just not add risk, Just don't add risk for a while until you're feeling a bit more comfortable. Might not be about taking risk off the table. Just don't add new risk. Let us complete the whip around the grounds. I'm going to go away from US indices because I think we've done them. We'll head over to Europe, and what we're doing now is transitioning from, what do we do with our portfolio, to look, is there something nasty going on somewhere around the world that means I need to be more conservative than what I just decided based upon my US and Australian indices. The cat looks cactus, I was going to say. I don't think it's as bad as cactus, but it's a fun thing to say. It looks pretty bad. I think it's turning a trend here, as in, it's quite a sharp downturn, turn the short-term trend. Which one's the short-term trend? Well, it's the light pink zone here. That's the 21 and 34 exponential moving averages. Okay, if you're tuning in for the first time, I can get you these ribbons on TradingView. It costs you nothing. It's just me. You send me your TradingView username by email to carl@livemarketanalysis.com, and I put you on a list, and you've got access to it. It really is that simple, and then you don't have to try and make them yourselves by me telling you the 2134s. They'll do all the colour changes and everything. The long-term trends are the 144, 233s. They're all Fibonacci numbers by coincidence, and what we obviously use them for is to give us a quick representation of what the trend is doing. There are other methods we can do that with also, like price action, like candles. But they take a little bit longer. What's great about this is we've got colours. Double green, everything's fantastic. Ambers, obviously we're in a transition phase. We're getting to pinks, things are turning down. So you can see we've got a short-term downtrend in place, and the long-term trend is indeterminate. It's neutral, having been up prior to that. You'll also notice that tends to happen, not always, but on the way up, the light green zone tends to support price. That is, the price tends to bounce off that light green ribbon and go up until it doesn't, okay? And then it tends to resist the price going back in the downtrend. Look how well, and we've just randomly picked the CAC here to demonstrate this, how well the ribbons are resisting the price going back above them. Same thing for the long-term trend ribbon, tends to support on the way up until it doesn't, and then it tends to resist on the way down. And typically, this is actually, the reason why I'm spending a bit more time on this is a textbook long-term change pattern. Like, print it out, stick it on your wall where you do your analysis. This one looks perfect. And what tends to happen when we break below the long-term trend ribbon and we fail to get above it, we have lots of these attempts when we break through whatever low we made. Prior to that, it tends to be then really the end. The end of the uptrend is convincingly made now, and we're in a new long-term downtrend. So I don't know what's going to happen. And that's the other thing I say in these webinars. I don't know what's going to happen next, but what tends to happen is the price will keep going down from here. The trend will change. Great case study in how the model works for a long-term trend, uptrend changing to downtrend. Is that a red flag? No, it's France. Who cares about France? Sorry to all the French people listening. I probably care a bit more about what happens on the DAX because it's a bigger market, tends to be more influential globally. No red flags there, but certainly we are seeing some loss of momentum. Going to go to the FTSE, that's going very sideways. Nothing to see here. The reason why it's skipping over these things is there's nothing to see here. There's nothing for us to do. We're not trading these markets. We're just seeing if there are any red flags. Are there any red flags in the Hang Seng? Not really. We know that's been pretty weak for a while. The Nikkei coming off. Interesting to see how some of these themes are linking together. So we've got the Nikkei and the Nasdaq looking very, very similar here. Probably something to do with, interest rate outlooks. There's some currency things going on there as well. India still looking okay, although I do note a big down candle there on Friday. Chinese market, we'll actually look at some different charts on these in a while, but just enough to say here that the trend is neither here nor there. Bring it back to Australia, and we're still okay. We're still double green. That's the first step, isn't it? The price action, I talked about that before. That's the position, relative positioning of our peaks and troughs. The peaks pretty simple. They're the bits that point up like this, and the troughs, they're pretty simple. They're the bits that point down like that. Think of mountain peaks and mountain valleys, okay? And we want to see them, obviously, rising peaks and rising troughs is a good sign. It means building demand, because that's how the troughs are created. If you've got excess demand creeping up the price there. And obviously each time we go up, we're removing supply. So we call that demand reinforcement and supply removal. Obviously when things are going down, and that might be good if you're going short, might be bad if you happen to be long. We have supply reinforcement and then demand removal. Those lower troughs means demand is being removed each time. We can see here that peaks are rising generally. The A shapes tend to be going up and the V shapes tend to be rising with them also. And the candles are the final sort of piece of the puzzle there, where we want to see white candles. I'm not going to go into how they're formed, but just remember this much, that white candles typically means excess demand in the system, okay? Black candles typically mean excess supply. So you can see there's a little bit of excess supply creeping in right at the end there, but otherwise I think we're still very much in a demand side market. Ergo, we're going to maintain our current risk level. Just very quickly, some people like this stuff. You know, what sectors are looking pretty good right now if you're looking to allocate capital? Hey, consumer discretionary, I think looks amazing, fantastic, incredible. What a great looking chart that is. So retail stocks. Energy looks pretty terrible. It was looking okay there for a little while, but you can see, lo and behold, what stopped it from going up? The dark red ribbon there, the dark pink ribbon, the long-term downtrend ribbon, as tends to be the case, doesn't it? Financials looks fine, no complaints there. Gold looks okay, looks fine. Look, last couple of candles not great, but I think we're fine there. Healthcare, I think, looks very, very good up there with consumer discretionary. Technology, I think we've got some problems here. I don't like this big black candle, you know, slashed straight through the short-term uptrend ribbon, which should have acted as demand. It didn't. A very feeble response here, an extremely feeble response today. I think we've got some issues here. I mean, this is something I would automatically go, oh, bang, 1/3 off the table there. I want to get there pretty quickly because I think that we've got some issues here. That's the other. Technology. Materials looks pretty darn awful. If you read my evening wrap on Market Index, we said that tickled the lowest level it's been since October 2021. That is, if it got beneath there. Maybe I didn't look close enough. But anyway, there or thereabouts. Oh, resources. Resources did it. Materials have some building companies in them as well. And resources certainly did this. I'm correct in saying that. Then we've got real estate. Still looks good. Happy with that one. Consumer staples actually looking very, very good. That's my favourite chart, I reckon, apart from consumer discretionary. So the best two, discretionary and staples. Who would have thunk it? In an economy that apparently is spluttering with all of us not wanting to spend money, retail stocks are doing quite good. These are communication services stocks, which are otherwise tech stocks, to be fair. Utilities are starting to turn the corner. That one's concerning. Again, closing beneath the short-term uptrend ribbon, and that ribbon now becoming dynamic resistance, or a zone of excess supply. What else can I show you in here while we're here? The base metals, always interesting to look at. Let's change this to a line chart because we don't have candles on the London Metals Exchange, but we do have obviously a PM fix, an evening fix, and therefore we just get a dot each day and we join those dots together to get this chart here. So we are looking at aluminium, ladies and gentlemen, which had a huge run through March, April, May, June. We're all loving it. Our resources stocks were going gangbusters. And then we hit this point somewhere around there where everything just turned around. The price action changed. We went through beneath those short-term trend ribbons. Those short-term trend ribbons, look at this, went from offering dynamic demand until they don't. And then they start to offer dynamic supply. It just cycles. And now we've sliced through the long-term trend ribbon, which I would expect now to offer dynamic supply. The trend there is changing. Copper is in the process of doing the same. That's disturbing if you're a copper bull. Iron ore has done it. Obviously, didn't rally as much as the other ones. And only hit its long-term downtrend ribbon. How about that? Before turning down. Nickel is just cactus. That thing is in big trouble. Lead is neither here nor there. tin, even tin, which was the strongest one of the lot, is starting to pull back now, and zinc is coming off a little bit as well. We know that lithium prices continue to plummet. I won't do any more of those. We'll look at, that's gold. Gold's doing so well, pulled back, unfortunately. We'll talk about some of the reasons, and let's keep moving along here. I must admit, I'm not sure if this is going to work. You can't see this yet, but I'm going to try to head over to here, and it is working. We are on Bitcoin simply because when I load the screen up, as I just did, it's the first one that comes up by default for me. It'll be something different for you. And looking okay. What did we say last time? I think we might have said you could if you wanted to, like given that it's turning off the bottom, it's holding the long-term uptrend ribbon, it's closer to the bottom than it is to the top. Hey, that's Bitcoin. You could have a little bit of risk on the table. Might have mentioned it, something like about 1/3. I don't think you need to have any more than that at this stage because we're just in a trading range. Ultimately, I was going to head to the source of the problems, which is always in the bond market. The bond market is always the source of the problems, or the source of the bounties that were afforded, and things were looking good when we're getting black candles here. That means the price of money is getting cheaper, and of course it is the price of money here. This is risk-free money that determines the price of all other assets, and we've had nothing special here when you think about it. Like 1, 2, 3, now forming the fourth day up. And what have we had on the Russell 2000? That coincides with Wednesday's candle, that coincides with Thursday's candle, that coincides with Friday's candle. And ladies and gentlemen, there's your culprit right there. Money got a bit more expensive, which means the world became a little bit less enthusiastic in owning risky assets like stocks. You could argue maybe it's a combination of weaker US economic data. It's maybe some unfactoring of when the Fed might deliver their first rate cut. Look, I don't know, nor do I care, nor does it really matter. It's just all of those things are coming to give us the candles here, and we're seeing the response. Otherwise, bringing it back home in Australia, same sort of thing. 3 days up, and we've been struggling for 3 trading sessions. Where are those yields going? You would say the 10s are pretty flat, aren't you? Wouldn't you? But you'd say the 2s are probably trending higher. Stocks don't like rates going up. It's that simple. In China, we had an interest rate cut today. It's very hard to tell that because prices were generally down today. I know they're close a little bit off their lows, but doesn't really speak to the 10 basis point cut in the key 1 and 5 year prime loan rates. And then also the reverse repo rate was cut as well. So that's the money at which the rate at which the PBOC, the People's Bank of China, lends to financial institutions. So obviously if that gets lower, banks therefore become more incentivized to put that money out into the economy because they're getting a lower return at the central bank. Okay, and that's the key one. I mean, the prime loan rate, that's always nice to get if you can get it. It makes it cheaper for Chinese consumers and businesses. It's the same as us getting an interest rate cut from the RBA. But the reverse repo rate, in theory, that's the bigger move. That was the real news story. And I'm surprised to see that that it didn't have more of an impact. And what does that say when good news is met with bad candles, with black candles? Definitely a disturbing candle there on the China A50 shares. They're the shares that Chinese locals and institutions can buy. And then if we look out to some of these property indices, look at that, black candles are plenty all over the place. So that's disturbing. Red flag. China's been a red flag. No pun intended. Of course, China's been a red flag. It's literally a red flag. It's been a red flag for quite some time. Let's go to, what am I saying? Let's go to the banking sector there, which was going gangbusters. We'll just look at this because there was a banking crisis last year. This obviously, if you look at the turning point here, is no doubt the 13th of July. In fact, some people getting in front running the attempted assassination of former President Trump because there's a general theory that he's pro deregulation of the banking sector, and any deregulation of the banking sector just allows them to make more money, basically, without any cares in the world, and that's why they rallied. So probably we don't need to look at these anymore. Let us head very quickly, and if we want to emphasise the word quickly because we're dragging along on a bit here with our whip around the grounds. I can say this very quickly: when those rates head back up, It does have a negative impact on things like silver. It does have a negative impact on things like gold. All the stuff, unfortunately, that was looking good. Copper, we saw on the London Metals Exchange, is definitely changing trend, and it's not doing much better here. Uranium is also turning the corner, but I've been warning you about this, not for weeks now. I've been warning you about the turn in the uranium price for months. For months now, really. I reckon even before that. I reckon it was here. Go check the tapes. I reckon I started warning you about it there. And let's face it, uranium stocks haven't been good for quite some time. And then we've got crude oil there, very, very sideways. And so is Brent crude. But there's nothing here that's going, hey, we've got a really hot subsector of the market that we can really, look for really great trading setups in. It's just... We've actually got a really crappy, choppy market at this point in time, and that does make for some difficult trading, some difficult decisions, and probably for some difficult results. So keep that in mind as well. Let us head then, with that whip around, the grounds are done. Back to the AMI broker screen. I don't know if I've tantalised you or scared the pants off you. Either way, we're going to do offline requests, and we're going to kick off with Alan, who's asking about MMI. We'll do the Aussie stocks first, and then we'll double back and do the US ones second. And let me head over here and go MMI, which is Metro Mining. Obviously, a very nice trend. It has been in place for many, many months now. Look, you can tell, we often see these in live market analysis, and we say, look, they're a little bit sketchy. There's probably a lot of paper around. That's the first thing you'll think when you see a chart like that. That means there's a lot of shares on issue. So when you've got so many shares on issue, you've got to chew through millions and millions and millions to get to the next level. That takes some time, and then it's changed the screen. Thank you. Who's that? Thank you very much, and that's why I have the earpiece in, so I appreciate that. We'll talk about Metro Mining. We're saying some of these sketchy charts, these blocky candles, are formed by the fact that when there's a lot of paper around, a lot of shares on issue, you've got to chew through millions and millions to get to the next level, and then once you're at that level, you've got to do it again. So you can get these sort of candles that sort of open, close, and don't actually go anywhere on the day. Not that you can't trade them. I'm just making you aware that that's what you're seeing when you see them. When they're trending, they're okay. But we will watch for the signs of price action that the trend is turning, like anything else. The signs that that the price action is turning, like anything else, can be seen in the form of lower peaks, which we do not have yet. But there's a very good chance that we might see one tomorrow, because today's candle, when you think about what this means, typically when we have been sort of bouncing along this, let me turn that off, but that's very annoying. Let me get rid of that one. I don't like these dashed lines. Now let me do that again. So when we've been bouncing off, it does it to me every time. Like you saw me press that. Let's try it again. There we go. There we go. Easier to see. When we've been bouncing off the light green ribbon there, we've been doing it quite emphatically with some nice candles, and we kind of tried to do it today. And if today had closed on the high of the candle, it actually would have been exactly what you would have wanted. Like dream come true for holders. We're bouncing off the short-term uptrend ribbon again, and we're just perpetuating this uptrend, trying to get that candle to look that way. So at one stage today, this candle here looked like this, okay? I'll try and overlay it, but it looked like that. It didn't finish like that because at some stage during the day, the supply came in and it started to beat down the close, okay? And this closing price, okay, as long as the closing price is above the opening price, we get a white box. And it beat down a little bit more. And whilst that's occurring, we're getting an upper shadow, and it's going to be very difficult to near on impossible for me to draw this just by the nature of this particular trading platform. There we go. But we get an upper shadow because the shadows represent where the price didn't stay, okay? And the high is the high of the day, and then that's the difference between, that line is the difference between the high and the current close. And guess what happened? Down we come again, down we come again, and down we come again. In fact, I'm going to leave that there. At some stage, we came down a little bit more, then the open. I didn't draw that perfectly, but we ended up with this. And we actually went through the bottom, and then we sort of rallied a little bit, okay, to form this candle here. So instead of the demand we wanted to see, in fact, what we got was supply. And that's why I say that there's a pretty good chance we may well get the lower high and the lower low to create, and this is not a prediction of the candle we're going to see, it is just an example of one possibility that we get something like this. And then we know that if this high here on this day and this high here, if we compare those two, and we can see that we've got falling highs and we've got falling lows also, that initiates a new short-term downtrend. Short-term because literally, they change in a couple of days. And prior to that, we had higher highs and higher lows. Okay, so that's our short-term uptrend, and the lowest point between the two, which is going to be, I reckon, this one here. It doesn't matter which one of those two, but just the lowest point. That will be our trough, or we call it a point of demand. Why demand? Because the only way it can work is if there's demand there, push the price back up. The upward pointing ones, obviously points of supply. And we can now start to get an idea from the price action that we are seeing falling points of supply. And if that candle occurs tomorrow, it takes out that point of demand, we've got some problems. We've also got demand destruction. We don't know where the next point of demand will be. It'll be somewhere lower. We won't know until the price heads back up again and forms the next point of demand. But we know that it will be lower. So we've got demand destruction. And that's something we don't want to see. So when we see that, we start to think, well, I got into this, wherever it was. Let's say I got into it, I don't know, through here, perhaps, say I entered here, just hypothetically speaking. And I got in because I had double greens on the trends. Yep. I had rising peaks and rising troughs. Right. I had predominantly white candles. I mean, these are the things that get me into a trade. Okay. So it makes sense that the things that get you out of the trade are just a combination of the opposite of those things. So for example, instead of having all white candles, we start to have black candles. Instead of having rising peaks and rising troughs, or rising points of demand and rising points of supply, we have falling points of supply and points of demand. The short-term trends, they're not double green anymore. They're amber. So I think we've got some problems here. I would say that if we were to close beneath this low here, and I'll give you the number in a second, Alan. So Alan wants to know what's going on here. The low there is 0.047, so I can say with confidence that close less than 0.047 for me then is minus 1/3. Would you do more than 1/3? It would depend on the severity of the candle, but given what's happening here, yes. For me personally, I think I'd go 2/3 there at least, and then you could also, if you're that way inclined, you could look for other levels, maybe beneath here for your final third. If you had an affinity with this one, you thought, I really like what they're doing, and I just want to keep a little bit of skin in the game just in case. Okay, if you don't have that affinity, you might just want to get the hell out. But we don't know what's going to happen. We have looked into the future with a hypothetical scenario. I've given you some levels, and it's just as likely we get a nice big white candle tomorrow, and in that case you would continue to hold white candles, lower shadows, full risk position. Look to add risk if we start to close, say, above 5.5, whatever this is. I mean, this is an issue here, so we want to get above there. I think we're going to see a bit of supply in and around there as well. So, those things would drag us into risk, but I don't think that's going to be the case. So I think I've given you a pretty decent roadmap there, Alan, for what's happening and a contingency plan on what might happen. Let's go to Peter here, and Peter has he's actually got Worley Parsons, but I'd rather do Woolworths Group. Just force of habit, typed in WW. So we started tracking this one. In fact, I've done the wrong thing. I'm not allowed to draw any, and many of you know why. Let me go back to the last one and just show you this point, because on MMI, where I've drawn all this stuff, these are the charts I use for market index. So I'm going to delete all that stuff because I don't want it there. And I'm going to go to here where I'm allowed to draw. And I won't do it again, but we can. I can draw here. So let's go auto. There we go. And I'll just quickly just do this bit here. Bloody hell. Do that bit. And just go here and say close less than 0.047 minus, I'm going to go 2/3 on that one. So the last time we spoke about it was all the way back here, and we said actually full risk position and add a third at that stage. And that was the right thing to do then. I don't think it's the right thing to do now. Let's go to that next one, which was supposed to be Worley Parsons, but I'm actually going to go to Woolworths because we talked about this one as originally as an aggressive setup. So that's there are three types of setups: the continuation setup, which is much like what we saw there with MMI, that is bottom left, top right for all intents and purposes. We've got a turnaround setup, which ironically this one is right now, but it started as an aggressive setup where we're building a bit of a base pattern. We're seeing a return to peaks and troughs. Predominance of white candles. We might even be getting some volume signals, and we're looking to enter a very, very small amount of risk and then add to that if we see fit. And we talked about it, I think, around here or maybe around here, and then we sort of talked about it around here, and I said something along the lines of waiting for the next push up off the long-term uptrend ribbon, which happened. I think I said something like next white close. Next white candle high close, you could add some risk, which is probably that one or that one there. Certainly that one, and certainly the one we're seeing today. So I am, I'm going to say I'm going to write this anyway, but then obviously noticing the supply zone there, and this is the other thing that we need to consider. Obviously, is where there are historical points of supply in the past. There may be points of supply in the future, and you can see here a cluster of points of supply. There's one there. There's also one here. We do that and that. So there's set a high. There's one there. There's one there. There's one there. So probably if we wanted to draw this appropriately, it would be somewhere between that top point of supply. And we also know that historically old points of demand tend to act as future points of supply, and there's a couple there as well. So we are in a zone, an area where we could see an influx of supply, and that is exactly what's happening. Okay, that's literally exactly what's happening right now. We're seeing that manifest itself in a little bit of a loss of momentum, and that's a good thing. When you think about what could or how bad that zone could be in the minds of traders, and the very, very subtle influence we're seeing here of supply, in that we're really only just going sideways for a few candles, I think that's a very good sign. So the fact that we don't really appear to be too afraid of that supply at this stage, I think that warrants adding some more risk to it if you have it, or adding some risk if you don't. So I'm okay with that one. Let us go to the one that was actually requested, which is Worley Parsons, and there's a lot less to like about this one. It is trying to make a bit of a base pattern, to be fair. So obviously, instead of going gangbusters down like it was, we have moved back into higher peaks and higher troughs. I don't think that's one, but there's certainly one there. So we're seeing things a little bit choppy, but generally speaking, higher peaks, higher troughs at this stage. The short-term trend ribbon, which was very clearly down and very clearly resisting the price going back up, right? We got above it, and it's tending now to offer dynamic demand. So that's a good sign. And we've gone from very clearly predominantly black candles to generally white candles. So there is definitely a changing of the guard here. Is this enough for an aggressive setup? I want to see the candles now. So I'm going to delete some of these so I can see the candles very, very clearly, because that's where my final decision comes from. I think there's a little bit of supply sort of lurking in the system. and I'm specifically referring to the shadows here. They're just telling us there's just a bit of supply lurking in there. It's probably coming from here. That's where it's coming from. That's why the supply's there. And then we've got a pretty decent level up here, and also that's coinciding with what we would expect to be a significant potential supply zone in this long-term downtrend. So, Peter, I can see kind of where you're going with it. It's, funnily enough, I typed in Woolworths, which is one we used as an aggressive setup. I can see some very similar traits here, but I'm not sure this one's as strong as what we saw with Woolworths, just in that we had a few more candles closing on their highs. We're not sort of seeing as many just yet because some of these supply zones. But look, next, white candle, high close. I would suggest you want a little bit of volume as well, because we've got all this supply here overhanging the market. The only way to get rid of that supply is to trade with it. So if you get a spike on volume plus a nice big white candle, it's telling you that demand came into the market. Demand came into the market because there's a big white candle, but the high volume tells you that that demand chomped away and chomped away and chomped away. Supply was plentiful in that big white candle, okay? That's not the ideal situation. The ideal situation is you have a big white candle with very little supply because it's telling you nobody wants to sell. But we're talking about different scenarios, different times when you want to see these. So when you're breaking through a resistance level, it's okay to have that supply or that high volumes that's telling you have dealt with that supply. So I think, Peter, in summary, there's just too much stuff that needs to happen for me to comment any further on this one. I don't think I need to. Ask me about it the week after, and if I need to, then I'll talk about it. There's not enough here. And, there's a few big giveaways here. And remember, look, if you're going to ask me about it, try and give me as much information as you can, because you're at risk of me seeing a downtrend and saying, look, don't ask me about these until you're really sure they're ready, okay? But there's enough there to at least consider. There's some issues here, unfortunately, on race oncology. The last time we looked at it, it seems, was back here, and on that white candle, there's really nothing more you could say but full risk position. It did go a little bit higher. Where did it stop going up? Probably at a level that we identified in the past, lo and behold, and we saw the manifestation of supply at that level, certainly in that candle. This candle, we're making at risk of making a lower major point of supply, so we've got a medium-term downtrend through here, and actually that's all one move. Can't see any lower lows, lower highs, and then we're coming up here. So I guess it's all the same move, but we are still printing lower peaks. Certainly lower troughs, I should say, but we're back to just nudging high peaks through here. But I would say that's probably all part now of the same supply zone. I'm concerned the price action could be better, because we know that this is good price action. All right, we're not seeing it. Okay, we're seeing something that's more akin to equilibrium. The other thing is we're seeing far more black candles. We shouldn't see that many in a strong, solid demand side move. I'm really struggling here to warrant any risk position at this stage on this one. Okay, so I think if you're really following my philosophy to the letter of the law, I think you're already out. I think you really started to let go some here. I think you probably let go of a few here. So I reckon there's just so many black candles here. I reckon you went 1/3 here, and this is more just so you know what to look at the next time you see something like this. But I reckon this, and I reckon at the most you plus 1/3. And I reckon with today's close beneath the short-term trend ribbon, I just think this is officially now in the too hard basket. So I reckon with zero risk position here. What could get us back in? Ultimately, it would be some big white candles closing at or around $2 to tell us this is not supply anymore. And until then, if you're getting out at 170 and you had to get back in at $2, I know it's going to hurt a little bit. It'd be annoyingly frustrating, but I just don't think that's your worst case scenario. The worst case scenario is hanging on here in something that really appears to be struggling. So I'm going to pass on that one. Let's go to Different Peter, I promise. Different Peter's got ACF looking okay. It's trying to bounce off the long-term uptrend ribbon. Looking at this in the past, much like the last one, it's actually a really good case study to go between race oncology and this one, where I did the same thing. So sometime in the history of this, we've looked at it and I've gone minus 1/3, minus 1/3, minus 1/3, and you really haven't missed anything, have you? If you got out around about 115 and you're getting in today because it's starting to look good, you haven't. All you've missed is the pain and agony of holding for about 4 months. Is this the time to get back in? I think this is going very sideways between you and me. I think this is still going very sideways. I think at most you've got an exploratory trade here. So if you've been reading your Jesse Livermore reminiscences of a stock operator, or the Jesse Livermore story, which I found another book today by Richard Smitten. Let me look it up. Give me 1 second. Should only take that long. It's called actually, I'll send it to you. I've got a PDF. So I don't know how that'll go with the spam filters. But I'll send you the link where I downloaded the ETF. That's PDF. That's the easiest way to go. Richard Smitten, as in Smitten. So Jesse Livermore talked about these exploratory trades that he would put out to test the market. And for him, he was trading enough size that he would literally be testing the demand and supply in the market. And if he bought and more supply came in, he knew that the market was readily supplied. But if he bought and then supply didn't come in to fill that void of higher price, he knew he was onto something. I'm not saying you're going to move the market, but I'm saying conceptually this is more of an exploration in that there's enough there. I'm seeing white candles. I'm seeing closes back above the short-term uptrend ribbon. I'm seeing holding of the long-term. So there's enough there to warrant some risk, but certainly not a full risk position at this stage. Okay. I reckon we're going to find better than that today. So let's keep looking. Let's go to other Peter's second one, which is duck, which is almost the same thing. So we're kind of really a bit of a sucker for punishment here. Once again, I think the most you could entertain here, and we've got some candles that look a lot worse than they are, because here I'm saying if you see that candle, if you see a close beneath there, then you would de-risk. We didn't see that candle, fortunately. We actually didn't see that candle either. You might well have taken some off the table here, but even then I don't think so, because you've got a lower shadow and you're still flirting with the long-term uptrend ribbon. So I think you're actually fine. I think you're probably still full risk position at this stage, therefore. So let me move that over here, if you don't mind, because we didn't end up really using those. So let me use this here and say, look, I think I'm still for full risk position. I'm certainly not adding any risk on the basis of this, and this. There's no reason to do so. I'm very encouraged by this. We've got a really strong demand side showing. We've actually seen very, very mild downside volatility since then. This candle is starting to concern me a little bit, but not enough to cause me to do anything. I should have kept those candles, because effectively I'm going to just say the same thing, aren't I? If we saw something that looked really nasty, that would be the signal to do something, to lighten the load. But in the absence of that, there's not a lot to do really, because now we're just going to take, and you can see where these points of demand are. So maybe we'll just take that one and we'll repurpose it and say, sort of beneath here, that's where your minus 1/3 would certainly be, like no questions asked. Do not pass go, do not collect $200. But you might find there's a reason to go earlier than that if you saw something like this. Okay, but until then, full risk position. So I'm giving you all the worst case scenarios. I'm helping you plan your trade on where your exits might be. Let's hope we don't need it. Let's hope we don't. Let's hope we get this instead. Okay, we don't know the future. Maybe we get that. And if that's the case, okay, then we're doing something like this. Absolutely 100%, no questions asked. Okay, so in each case study, I'm trying to give you, I guess, a roadmap on what to do, because I'm not going to be here for literally another 5 candles until you get to ask me again. Okay, there are all the offline requests on the ASX. Let me head back to your online requests. Thanks for being so patient. We've got Adonis starting with Lovisa. So let's go back to our regular Zoom there. so we can look at each next opportunity with the same on the same basis. And I think this looks very good. We've got short-term uptrend in place. We have a long-term uptrend obviously in place. The long-term uptrend is doing its job very well. It has been very choppy. The short-term trend has really struggled to do its job. But the good news is we're trying very hard potentially to break out of this trading range. We're sort of obviously towards the top end of it. We've tried to crack through. And what did we find when we tried to crack through? Literally on these candles here, you can see the manifestation of supply. This is a reluctant rally, isn't it? If we go to the weekly chart, we can see what's at stake here. Okay, and maybe you get a bit of a sense of that reluctancy of the market because ordinary individuals are trained to think that when something goes up, it's too expensive, or when something goes up, it's probably on the verge of going down. And they can be stimulated to sell. They've had a tough time maybe also with Lovisa through here and through here and through here. They've been conditioned again at the top end of that range to let some go. So we need to convince them. We need to change the market's mind. We need to get them out of that habit of thinking that 34.50, 35 is expensive, and the best way to do that is to push through that level and get to higher prices, and then 34 starts to look cheap. Is that possible? I think it's entirely possible. I'm encouraged in a pretty awful market over the last couple of days. There's pretty awful market here on the ASX 200. We're seeing some white candles coming in. In terms of the price action, I told you we like to see this sort of price action. We want to see those second from last troughs or second from last points of demand. So let's label it in something you might actually be able to see. So point of demand and point of supply and point of supply and point of demand. And this is what we call good price action, because the last point of demand, which is this one, and I'll prove it to you because we'll call it point of demand 1, and this is point of supply 1, and this is point of supply 2. So the last point of demand is at or above the second from last point of supply. Okay, so what we're seeing here is that yes, there was supply up here, people thinking that that's too expensive. We get above it, that doesn't seem so expensive. Point of supply, when you're at point of supply 1, point of supply 2 doesn't seem expensive anymore. What does it seem to you now? It's always a case of perspective. At point of supply 2, everything seemed expensive. At point of supply 1, point of supply 2 now seems cheap. Okay, so we pull back, and all the people who got out here, they realise that mistake later on when the price is above it, and they look to buy back. They try and undo their mistake by getting back in where they got out. Other longer term investors, the demand side looking to accumulate, they know potentially that there's going to be latent demand at that old point of supply, and they start to buy in advance of that. They don't want to let them get the supply. They want the supply for themselves to fill their orders. And that's why when we see that last point of demand is at or above the second from last point of supply, that is a good thing. Okay, that's the theory. This is the theory. What's happening in practice? And we're going here high, high, higher, high, lower, high, lower, low, high highs, higher highs, lower highs, lower lows, high highs, high highs. That's certainly starting the downtrend. We've got inside. We're here and we're actually sideways. We're actually sideways trend from here. Okay, but let's assume. In fact, I reckon we've actually got a higher high. So look at that high there. If you don't believe me, 33.91. Okay, we go to the previous day's high, 33.89. So 100% actually. We've got a higher high and a higher low there, which means we can actually draw this line in, and that gives us this point of supply. So we saw the point of demand. We saw the theory. Now we're seeing the practice here. Point of supply 1 and point of supply 2, and we can see that point of demand 1 is at or above point of supply 2. So we've got good price action. I think the candles could be a little bit better. Okay, this cluster here is not ideal, but I spoke about how good these two are. So I'm okay with this. Bottom line is we've done the analysis. We've got strong trends overall. The price action is improving at the top of a range, which is well defined, and we're now starting to get to that point where the top of the range is less scary. Okay, we've looked at the weekly chart. We know that we've had a huge rally, consolidation, pressing and pushing up off that short-term downtrend ribbon, short-term uptrend ribbon on the weekly chart. Stuff works the same here. You can see like clockwork, how well. It says clockwork, that long-term uptrend ribbon. It works on weeklies, it works on dailies. So, it's coming together. And this is the method, this is the work that I want you to do on each of your trade setups. And again, a lot of what I do here is just repetition, and hopefully you pick it up as you go each Monday night, a little bit at a time, because I know I explain the same thing over and over again, but maybe I explain it better the next time around to get to the point where you do this on your chart. You go, what do I reckon? I reckon it's a full risk position. If I had it, if I didn't have it, could I add a third? And that's where I'm going to pause a little bit. And I'm very, very close on this. Because of how nervous I am about kind of everything else that's going on. We talked earlier about today about maybe just not adding new risk. Let me just say then, okay, can I just say, if you'll permit me, next white candle high close. Well, I guess it's just next high close, really, isn't it? Next white candle high close, next high close. What did I say I was going to write last time? Next candle, next. Really, it just needs to be next high close. That's actually all it needs to be. Next high close plus 1/3. Okay. Literally, I mean that. You get a candle that closes on its high. I reckon that's your 1/3 here because of this potential. Okay, zoom, normal. That's what we're talking about. Let's go to the next one. I think that's a really interesting and dare I say a fun case study also. Let us go to Adonis is still here, and we're going to GQG, which last time, what did we say? Oh, did I say? Look at that. I said minus 1/3 on this one, and then I might have said if it closes beneath. Yeah, I did. I said minus 1/3 plus 2/3 remaining. How about that? I don't think that's such a terrible thing. I think you might have been cursing my name here. Definitely cursing my name here. I think it was because of the $3 as well. I think we had the combination of particularly this black candle. This one's neither here nor there, but that black candle and the $3 probably. I'm trying to remember. Caused me to say minus 1/3. Yeah, I reckon this is very easy here. So let's go. Let me get rid of some of these things, these hypotheticals. Is there a little trough there? There ended up being a little trough there. So I think the level was kind of here. And you know what I say, if we close beneath it, then we would exit. We haven't closed beneath it. So this what we're fishing for is a second minus a third, and we don't have it yet. Okay, so copy, paste, question mark. Was that it? If you went there, no complaints. I can see why you would. Between this and this, I think you've got every reason to do minus a third. Okay, if you haven't, then it kind of, I think, needs to get pushed back a little bit to under here, because this is now the key point, okay? That's what it is. So certainly close beneath there. Close less than equals minus 1/3. And that's it, not much else to do. I don't think we're obviously not adding risk, okay, because we're worried about this and this. So 2/3 is still where we're at. We've got a roadmap to get rid of another third. I reckon, oh, well, look, this one's so close, you might as well just wait for that. You know, I was going to say, look, maybe all out on that first one, but there's also that one there, you know, maybe just give it that little bit of extra room. And at least now we've got a totally clear roadmap now for how to exit this one, how to de-risk GQG, which, you know, ultimately up until this point has been a very, very solid trend. Have we seen anything of this magnitude that's challenged it up to this point? Certainly here was a bit scary, but turned it around very quickly, and that's what we need to see here. This is a very good start. This is a great candle to see in that light green zone. Don't get me wrong, that's a good candle. So that's a big thumbs up, and hopefully we can see more of these, and we just keep going. Okay. But this is probably the biggest challenge it's had in terms of supply side control in this entire run. So that's why we're taking some precautions already, and we're understanding where the next precautions will be taken. Roscoe saying hello Roscoe. Nicola saying Wesfarmers. Did we see the dink? We did see the dink. I'm pretty sure and you probably saw it going up, and like me, Nicholas saying, frustrated to see it go up like that. I haven't run it in my charts because ultimately this is a major point of supply, and that's what I'm looking for. That I want to see how it performs here. And yes, that's exactly the dink. It's the textbook dink, and it's the exact dink you want to have when you're having a dink, because look at the candles in the dink. So if you're here for the first time, you're wondering what the hell's going on. What is a dink? A dink is a little bit of a pullback, okay? Within a strong trend, just a little pullback, a little test of the demand side, a little bit of supply side control coming in, and we're seeing how the demand side responds. And if the demand side responds with this sort of strength, which is really barely giving an inch. Look at these white candles, white bodies, lower shadows. We're trying to go down, we're going back up. These are intraday dink. That's an intraday dink. That's an intraday dink. And then with this one here forming the little trough there. So we can kind of start to put actual terms and rules on what a dink is, because we do have here a lower high and a lower low. Okay, so you've got a little point of supply formed, and then this very tightly formed point of demand. Very quickly, it only candle, good candles. It only took a candle to form, I should say, and then we've got some really nice candles on it. And today's candle is perfect in a really awful day, and we're seeing this powerful demonstration of excess demand at a point where that really should be associated with supply, and there's no supply there. So for me, yes, I haven't done my watch list yet. Whether I'll do it tonight, I'll probably do it tonight while the video's rendering and uploading to YouTube. But I can guarantee this will be in a feature chart of mine. So therefore, if you see a feature chart automatically, you know the secret code for that is FRP plus 1/3, certainly. FRP plus 1/3. I better keep an eye on the time, because I do need to get that watch this done for you tomorrow morning. Okay, let's keep moving here. We're going to go to TLX, which last time we looked at it was here. Clearly, I said FRP, and that's all I could go on that day. We haven't had the greatest of markets for these high-flying stocks, high PE stocks, high-growth stocks. I don't know if you've noticed, but they've been getting smashed over there on the Nasdaq. So this is one of those high PE, high-growth stocks. It's actually done pretty well, all things considered, which demonstrates how good the trend is. That candle there is an issue. $20 is an issue, I guess. Popped up here. What was that high there? 2016. So it actually dealt with it, to be fair. It kind of dealt with it there. So that's the day that you're dealing with $20. So forget what I said. $20 is not an issue. That's the day. You dealt with it there. This is fine, full risk position. This is disturbing. This is disturbing. This is no big deal. And then this is outside this day, like 3 days outside. So the range of this candle is wider than all of these three. It's black. It closed on the low. This is a shot across the bow by the supply side. Very slightly elevated supply, no big deal. This day is encouraging. This day is okay, and that's where we are. We're okay, but it does give us some pretty clear points. I think I think I can swing for his position for now, but that's a major problem. If you wanted to knock out a third immediately, you could. Otherwise, I think close less than that is minus 1/3. If it was another candle like this, okay, and I know we're back to our hypotheticals, but I want you to be able to visualize what I don't want to see. So if I saw something like this, then that close minus 1/3 would become, I reckon, close minus 2/3, okay, or more. Okay, so that, in fact, I think that would pretty much kill the trade for me if we saw something that severe, to be honest. But at the very most, you'd be retaining 1/3 on that, but potentially less. Okay, don't panic. That hasn't happened yet. Let's keep going. That's for Sadesh. So full risk position for now, Sadesh, but we're on alert. Let me just copy paste. Copy, paste, exclamation mark means we're on alert. Let's go to Nicola. I've answered that one. John is asking for CVL. Civmec, okay, interesting. I have not seen this one. Doesn't ring a bell. The reason why it doesn't ring a bell is that, I'm guessing it hasn't met my minimum turnover criteria of 200,000 a day on average over the last month. And you can see it's only just ticking over $200,000 on these 2 days, which means that if you took an average over the last, and I'm pretty sure that's a 3. You can see I've got a new line on here, which is the 3-month average. I can confirm for you, 3-month average. So, yeah, I don't think this has been meeting my liquidity filter. Now, I say that to let you know why it hasn't been coming up in my scans and in those articles that I publish for you every morning, and also that it doesn't mean it's a bad thing. It just means I haven't seen it, okay? Everything else needs to meet the criteria. So double greens, rising peaks and rising troughs, predominantly white candles, we're okay. There's no round numbers here to worry about. This is not a candle that's sufficient to cause me to do anything but continue to hold based upon what has been a very strong candle before that. So I'm still FRP on this one. I wouldn't be adding any risk on that last candle because I don't think it warrants it. Okay, that candle is pointing to a bit of supply up here, a bit of supply. Okay, but certainly if I had it, I could hold on to it. Let's go to the next one here for John, which is EZZ, which last time we looked at it, I'm guessing might have been this candle here, because that's 5 candles ago. That kind of makes sense. 15, 12, yep. So that's a Monday candle. So absolutely 100%. That's the last time we looked at it. And there's nothing so sinister in any of these 5 candles since then to concern me. So I would still be full risk position. I don't think I need to add a third because I don't have a signal to do so at this stage. But if I had another white candle that closed near the high of its trading session, then absolutely I could. So, that's where I go. Next high close plus 1/3, in case you're wondering. Next high X. Next high close. Okay, let's keep moving. Going to go to Brett. Is Brett saying, am I calling for a bear market? No, absolutely not. I don't know how that message got through. No, I'm not calling for a bear market. Couldn't be further from the case. How can I get a replay anywhere, says Francine. Subscribe to Livewire and TradingView to join this Google Meet. No, no, it's not on Livewire and not on TradingView. So Francine, if you're here because maybe somebody sent you a link, just send me an email, okay, to carl@lifemarketanalysis.com, and I'll set you up with your own login, okay, and that'll get you access to the TradingView ribbon as well, okay. So if I've got it wrong and you've already done that stuff, then ignore that. I'm not sure what you're asking about. Michael says, Carl, can I have a look at GEM? Certainly can. Looks fine. I know there's 2.5 not great days, not really bad days either, but they're not great days, but there's nothing there to panic about. I just can't see enough supply to concern me at this stage. They kind of start innocuous too, but they do go through those phases of putting in lower peaks and lower troughs, and we just won't know until we get there, Michael. So really, without a crystal ball, and I wish I had one, but I don't, all I can say is there's nothing here to tell me to do anything but a full risk position at this stage. Those candles are not bearish enough to warrant taking risk off the table. All I can see is a really good trend that's just broken out of a trading range. It is one of those sketchy charts. I'm guessing GM probably has a lot of paper around as well. Let's go to your next one, which is SMN, which doesn't ring a bell, Structural Monitoring Systems, and I can see also not a lot of volume, certainly not a lot of value trading there. 200,000 shares of 60-cent stock is not going to get above my 200,000 minimum. Doesn't mean it's bad, just means I'm not seeing it. If I had seen it, this 100% would have been on my list. You know how I operate, and the candle there is here. The candle there is here. Of course, the candle there is also here. But the signal candle, the one that you need to take note of, is this one here, and it's going to do the same thing, so I haven't told it not to, and I have no idea why it keeps going back to the dash line. It does. That's the signal candle for the turnaround setup. Remember I said there are 3 setups, a continuation, bottom left, top right. This one is changing trend, so we're pushing above the long-term uptrend. All right, ribbon, we're coming back. There's your dink, okay? That's the technical term, the dink. We know there's demand coming in the system. We want to see how supply deals with it. Supply has been conditioned to sell into demand. Demand has been conditioned to fade, to run away at the first sign of that supply. What we're seeing here is a changing of the guard, a changing of the psychology of the market. We want to see that test, that dink. We're seeing supply come in and say, I'm conditioned to bashing you back down again. And supply said, well, in the past I've been conditioned to running away. I'm not running away. If anything, I'm going to take your supply and lock it up. So this candle here is the key one for the turnaround setup, the textbook play. There's nothing that concerns me after that. In fact, today's candle is another buy signal for me. So I'm going to go FRP plus 1/3 on that one. Happy holder, happy to add risk. On structural monitoring systems, thanks for bringing that to my attention. Michael, THL is going to be more of an aggressive setup. And what are some of the hallmarks of the aggressive setup? The third type of setup. Do we have a long basing pattern? Well, we've got a couple of months, better than nothing. When we had that the low point, was it set with an influx of volume and volatility? Actually, it was potentially indicating an exhaustion, that final capitulation of the supply side. Are we moving back after that consolidation phase, that base pattern, I call it, into higher peaks and higher troughs? Yes, we are. Are we building up this predominance of white candles? Yes, we are. Are we seeing maybe a little bit of a push on those white candles, indicating we're removing some supply? And I believe we are there. Okay. It's very mild, though, to be fair. So I think this has all the hallmarks of an aggressive entry. And because it's an aggressive entry, we wouldn't. So you can do whatever you want. But you know how you've seen many times me write plus 1/3 for an aggressive entry, and you do what you got to do. But I'm tending to chop that. I'm not sure why delete's not working. Let's do it that way. Chop that in half, go plus 1/6. The question then becomes, well, is today's candle a strong enough demonstration of demand to do that? I don't think it is, unfortunately. That upper shadow is just keeping me back a little bit. I can see why the upper shadow is there. I'm sort of looking over, I can see we're seeing a bit of supply coming in at $2. But I think this one's in play now. I'd like a bit more volume. I think it's very close on an aggressive setup. I think it needs a little bit more cooking. Look, keep an eye out for a bit more volume. Keep an eye out for next candle high close, that sort of stuff. I'm not sure if I'm going to leave this on here right now. Let me just write, just so I know we considered it. I'm just going to go question mark for an aggressive setup, but we are set up waiting on one more demand side candle is really what I think we want here. Okay, so just so we know for next time, and ask me about it next time as well, Michael. It's an interesting case study. Let's go to Perry, WTM. Stop typing in new ones. We're at that time where we need to put a limit on it. Waratah Minerals is one. I'm pretty sure we've talked about it here. I know because I've put it in my scan list, and I think I might have even run it as a feature chart somewhere along the line there. I certainly will be running it as a feature chart today because it is exemplary. FRP, if you have it, if you're lucky enough to have it, plus 1/3. If you don't, there's just no questions asked here. There's nothing that would prevent me to do that. Okay. Looking back to see if there are any sort of major points of supply, there really aren't. I mean, it's quite fluid. You can see it's quite fluid down here. Just regular peaks and troughs, no major peaks and troughs. Maybe there's a little level through here, but it's pretty weak. And even if it is, it's a long, long way away from where we are. So I'm not foreseeing any issues there. 50 cents is the next round number. That's miles away. So I cannot give you one reason why you wouldn't take this course of action. Full risk position if you have it, plus 1/3 if you don't. Thank you, Perry. Let's go to Perry's got some US ones. We'll do those soon. EVN for Roscoe. A little bit more sideways, clearly. Very volatile, very sketchy chart here. That's your first red flag, really. Not that this can't be a good trade, but that there's probably something better out there than what we're looking at. I'm going to give it a 7 out of 10. You know, it's a warm 7 out of 10. It's not high up, and I'm just concerned about a few of these other things that are going on here. And look, you can see even the last time we looked at it, it was pretty good, wasn't it? Over here, full risk position, plus 1/3. Look what happened next. You know, and again, I might have said something along the lines of the leopard doesn't change its spots. I think it's okay if you've got it. Dare I say, full risk position, but I'm not going to go plus 1/3 on this because I think there's other gold stocks out there that are closer to deserving it than this one. But if you've got it, have a look at what you might get out of it. That's all. Give yourself the opportunity, is what I'm saying. Because it's a warm 7 out of 10. Let's go to the next one here. And I'm pausing because I'm trying to find it. For Herzl. Welcome, Herzl. SNL. Which looks great. No complaints. You know, threw in a cluster of black candles. And what happened? You know, down it went. Price action changed. But now it's thrown in a cluster of white candles. Changed the price action. I'm pretty happy with this one. I can't really fault it. Yes, we've got a bit of a point of supply up here. But, you know, we're pretty close to it. And it doesn't look like it's too concerned about it, does it? Let's go. Let's put that across. I mean, you could almost really push that down to here, where this black candle and this shadow comes in. It doesn't look like it's worried about that at all. I'm fine with it. I'm okay with that. Let me just put it back to those two peaks and draw in my price action for completeness, which is obviously that, and that. We don't know what's happening next, but we have high peaks and high troughs. We've obviously got a predominance of white candles. We held that long-term uptrend ribbon. It is long-term uptrend ribbon. We're back above the short-term trend ribbon. A little bit of a dink through there, and it's all good. So FRP plus 1/3 for me. No problems. Let's go to your second one, VYS. Vysarn also looks good. Better zoom that out to see just how good it is. I'm pretty sure this one's come up in my list not long ago, and it's textbook. It's textbook continuation. There's everything I like about it, nothing I don't. And if I say that, then I'm compelled. It's a very important way to think. If you can't find a reason to sell a share, and if you've got every reason to buy a share, then you are compelled to follow through, aren't you? Plus 1/3 on that one. Let's go to Amber Jane, who's got ACW, which are pretty... Actually, I did ACF, but not ACW. Look, it flamed out. I'm kind of glad you brought this one up. Last time we looked at it was FRP through here. I'm pretty sure I ran it as a feature chart on this day, and it deserved to be a feature chart. But you've got to remember in those feature charts, that's just methodology. That's just, you know, plus 1/3, get in. It's not tradecraft, Amber. So the tradecraft is something you have to do. I can't put that into a morning watch list. It's too complex, right, for market index readers. But you know what tradecraft is. Tradecraft is when you get to a round number, just be very, very mindful. We got to 9.9, so that's within your 5% rule, so it'd be 0.95 or above. You're looking to have hard orders in the system for minus 1/3. If that candle, if you then get a big supply side showing on that candle, you could do a minus 1/3 the next day. I'm not sure that's so horrendous that it warranted it. Yes, it's a supply side candle, clearly, and it's at a round number, but it's still finished with a white body, still finished with a little bit of a lower shadow. I reckon I would have given it the benefit of the doubt there and not exited in this candle. But when I saw that candle, then I'd have no choice that at the open of this candle, you're doing the second minus 1/3. So I reckon we're minus 1/3 here, and I reckon we're minus 1/3 here. And then the final third would be, I think, under here, a close beneath that level, because we're also interacting with the the short-term uptrend. That's if you're that way inclined to give it that sort of extra room. Okay, I think that's where we're at here. But again, if you, oh no, I forgot about it. It's like, that's okay. That's why we're here. We'll know for next time. But keep an eye out for those round numbers. Don't get more rounder than something moving from, edging at 0.1% to that big boundary, barrier where you start to move in Husted increments at 10 cents. Let's go to Duratec, which is starting to look good actually. So last time we looked at it, it was definitely a turnaround play. We said plus 1/3. It hasn't done a whole lot since then, to be fair. It's largely sideways. Certainly hasn't given you a reason to get out. It's just shadows all over the place, isn't it? But it looks like it's trying to actually dispense with the funk that it's been in. And today's candle in a very tough market, I think, tells you it wants to go up. It's holding now. It's using that long-term trend ribbon that previously was stubborn resistance. Is now it's quite stubborn demand. The short-term trend ribbon is coming and supporting as well. And today's a decent candle. I would have liked it to have closed on the high, but I don't think it's a deal breaker. What I see, I'm going to go FRP if I have it. I'm going to go plus 1/3 if I don't. Is this the strongest setup we're going to see today? Is it even the strongest turnaround setup we're going to see today? I'll let you decide when you go back and look over the videos, okay? But in isolation and in and of itself, I think it looks fine, more than fine. SNL, which we've discussed, Nicola asking about one that Hoozle asked about, great minds thinking alike there. Xero, XRO, not that one, XRO. I say that with some pain because I really had high hopes for this one. I mean, it just looks so darn good. And it's just a function of, again, when the Nasdaq gets smashed like that, this has actually done extremely well. If you're disappointed by Xero's performance, let me tell you, given what the Nasdaq did, this has done incredibly well. It's been incredibly resilient to that decline, as has Telix and as some of the other high flyers that we've kind of been taking advantage of that haven't done so well since our last update. But it has succumbed a little bit because it looked so good before as well, didn't it? What to do here? Look, none of those candles in and of themselves are clear-cut sell signals. When you start to put them together, they are problematic. As in, you sort of kind of blend that one, and that one together. Even, it's not a great look closing beneath here. I'm loathed to be pushed out of this position on just individually such weak candles. But when you put them together, it's a really quite convincing move, isn't it? And I guess if you're reading between the lines, I can't give you a definitive answer all the time because I don't know. Sometimes the technicals don't allow me to give you that definitive answer, and I don't know the future. We've got a point of demand here, and so then we sort of defer back to the stuff we do know. There should be demand here, a strong candle here. So this is a strong candle, a strong showing of demand side superiority. We don't want to see the price close beneath there because it really does beg the question, where did that demand go? I'm loath to do it, but I think you still have to. I think, close beneath. And look, I think in this case, we're only talking about minus 1/3, aren't we? We haven't hit any round numbers. There aren't any clear, obvious candles that just stand out or volume, volatility explosions there. So I think it's doing the responsible thing, sucking it up and saying, I've got to do it because it's the right thing to do, and taking 1/3 off the table. And otherwise, what is a very good trend, and therefore we'd still have 2/3 to go. But that's a tough one for me. Probably a tough one for you also, Michael. This one's a little bit clearer cut. We were quite decisive on this last time we looked at it in setting. I said, there are some problems here, and it's great to go between the two because it allows me to show you, well, this is a problem candle in and of itself. I don't have to combine it with any other candle, and this is a really big problem candle. Since then, it's actually been very quiet, but I still think, there you go, if you want to give it a bit more room to move, this arrow here is the one, close beneath that. We're reducing, and I'm pretty sure we're at our final bit of risk here. As far as adding risk, no, there's no candles there to add risk. There are no white candles, there are no demand side showings at the end to compel us to add risk to this one. Wisetech, you've got the trio of high PE, high flying stocks, Michael, and it is painful what's happened there in the Nasdaq. And we have no control over these things that occur to us. All we can do is control ourselves. And again, we've got problems here. I can't see why you would be a full risk position on this. I think there's enough lower peaks, enough taking out of little points of demand here and there to warrant having at most 2/3. So we're not FRP. We're sort of plus 2/3 on this one, and we're then really looking at points where we're going to remove further risk. And I put to you that beneath, because this is an important candle here. So this candle here, it's a demand side showing, and here it's clearly an important trough, an important point of demand. So I would say beneath here, so close below, I think quite simply zero risk position. As much as that, it all sucks, but that's the market we're in. One that we haven't talked about today, probably, and I'm really encouraged by this, that the fact that nobody's asked about it, is this one here, the Droneshield. Because I think you all know what to do when you see a candle of this magnitude. And, there's been plenty of stupid stuff said on, Twitter, X, that, that's where I like to spend a little bit of my time during the day. Reading stupid stuff, and there's the dumbest thing I heard, and I'm still trying to get this person to understand. I don't know why I'm wasting my breath, honestly, but the number of people that called this that jumped on this and said this is an exhaustion gap, and just the arrogance, and look. I don't need to deal with them because the market would deal with them, right? The market deals with all arrogance. But the arrogance after the fact, right? Not having made a single call on the way up. I mean, I ran this as a feature chart, highest conviction, plus 1/3, 15 times. You read the tweet. 15 times I ran it. So I was on record. But the arrogance of jumping on that day and saying, see, I told you so, that was an exhaustion gap. Okay. But failing to acknowledge the gap there. And, there's a gap there and all the other gaps. There are gaps throughout. Ladies and gentlemen, this is not an exhaustion gap, because think of the language you're using. Who was exhausted in this candle here? You've got two options. Was demand exhausted in that candle? Does it look like a candle where demand is exhausted? Okay. Two definitions of the word exhausted. One, I'm exhausted. I've been talking for about an hour and 22 minutes. I'm really tired. Okay. The other definition of exhausted is depleted. Okay. Run out. Is demand tired? Well, that's an absurd concept. Demand equals cash. Demand equals all available cash on the planet. Cash doesn't get tired. It certainly doesn't get tired if it sees superior risk-adjusted return. Okay, plenty of demand on that day. Did demand run out? No, it didn't run out because it was a wall of demand. It is the most perfect demand candle you can get. So to call that an exhaustion gap is just plain stupid and ignorant. And then to say the next day, after you fluked it right, and you had the benefit of really a short seller, a few short sellers being lucky enough to tell their story in the media at the most opportune time. And it seems, and I can't verify this because I couldn't be bothered, but somebody did write to me and say that one of those particular short sellers has a habit of shorting stocks and then turning up in media articles to discuss his short position. How disgusting is that? I don't know what's more disgusting. Somebody doing that and not having the skills or the confidence in their own ability to make their money by not doing that, or the journalist who writes that article. I don't know what's more disgusting. But to crow about it after the fact, having not made a call all the way up and say, see, I told you so, that was an exhaustion gap, and not understanding that it all has to come down to demand supply. is a little bit confusing for me. That's my rant. I'm going to head back up the list because I've done all of the Aussie stuff. I'm going to do the USA ones now. So just be careful what you read, I guess, on the internet, because a lot of it is stupid. Let's go to Hoozle. No, SERV. In fact, I'm in the wrong place there. I'm going to go here. I'm going to go... Oh, that's annoying. What I just clicked there. I didn't mean to click that. Go here. I'm going to go SERV. Yeah, why not? We'll go here. That can't be the right one. That can't be the right one, Roscoe. Surely not. It can't be, because there's really no chart there. So one candle, it does not make a trend. So if that's the one, I'm not sure what to do with it. I'll leave that up to you. Something's going on there. Reconstruction, not sure. So maybe a little bit too early. But if I've got it wrong and there's a different one there, please let me know. SP has a few thumbs downs coming. SPNS. SPNS. This one, Sapiens International. Let's try that one. Who's that one for? This is for Perry. Let's go to here. Oh, this is magic. No complaints here. Again, if you're looking for risk, okay. For FRP, you're not going to do any better than this, I expect. Perfect trends, double greens, rising peaks, rising troughs, good price action, last point of demand at or above the second from last point of supply, predominance of white candles, white candle at the end there, compelling us that it's time to go. So full risk position there, going to click save. You're all complaining. Remember, shout at me. Sorry, I should be here. We didn't miss anything. It's Perry's fantastic stock, which I've just explained to you all the superlatives of it. But the only thing we did miss, fortunately, from Roscoe is one that didn't make any sense, which was this one here. So I don't know if I've got the right one there, Roscoe, but that's what we're looking at there. So let me know if I've got it right. Screen change, thank you for letting me know. Okay, so I did Perry's first one, which was SNPS. So, synopsis? No, that's not, no, what am I doing? SPNS. Sorry, I'm all flustered now. SPNS. Sapiens International, that'll make more sense. Click save. Okay, Perry's second one, MUSA, which is Murphy USA, looks just as good. I should have actually just had a quick look out there to see if it's blue sky. This one is. Let me go back to SPNS and double check that that's also on the weekly chart. Blue sky is, so there's nothing to worry about here. All happy days. I'll go back to MUSA, which is Murphy. I know I'm jumping around, but obviously just making sure I complete the analysis. Through the round number here is even better. Once again, high peaks, high troughs, double greens, predominance of white candles. There's nothing here which tells me not to do FRP plus 1/3. And thank you so much for Perry, because you're a wonderful contributor to these sessions, and I've no doubt there are people listening today that have done very, very well out of your contributions. VIRT is your third one, which, yeah, look, that's a big pop, isn't it? It's a big pop, and I think Thursday's candle getting in Friday morning, and you're already ahead. Today, I wonder if this is the first time we're getting to $30. It's a long way from the green line. It's not the first time. So $30 less important. It's a long way from the green line, but that's all it is. I mean, I'm throwing obstacles in the way, which I know I'm going to climb over at the end of the day and say, look, it's one of those. I think you just want to get some skin in the game, whether it's 1/6 or whatever it is, because you feel. And not 1/6 because it's not going to go up as much. It's just 1/6 because I'm guessing you're going to feel less comfortable. This is really going to push you outside of your comfort zone to buy a stock that's gone up so much so quickly. But once again, it's not going up because demand is exhausted. Okay, quite the opposite. So if it suits, plus 1/6 on that one. If it suits, go plus 1/3. Thank you, Perry, for those three great looking setups. Let's go to... not many US ones here, so this won't take long. In fact, I think they're our only US ones in the online requests. If I've missed one, let me know. I've scrolled down to the bottom for you. I do have one offline request. This one's from Alan. It's on Z for Zillow. You can see that coming up there. And I still think it looks fine. So look, Alan saying price action looks good. Couple of recent down days, yes. Yep, with the market, I agree. Nothing untoward going on here. Now hoping for a dink. Yeah, look, and I think that's where you are with this one, and let it dink. So everything else is fine. Everything checks out for a turnaround trade. Let's see that white candle come in. White body, lower shadow, potentially even pushing down towards this old point of supply and into that short-term trend ribbon. Nice high close on the candle, and then it's going to look very, very good. Just the severity of this candle, I might let it do that candle and maybe on the next one go, just to be a little bit more cautious, given also broader market conditions. But we'd have to see how good that next candle that comes. But it's hypothetical. I know you'll know what to do when you see it. That is it officially for tonight. If I have missed one, please let me know. Matthew, an update on the... it's not the Droneshield one. Okay, but I'll read it out loud. On July 10, a journo, Ian Salisbury from Barron's, wrote an article, The Surprising Stock That Is Helping 8 Small Cap Funds Beat the S&P 500. That stock was FTAI, okay, that we have followed in the US. 3 hours later, Wolf downgraded it and it tanked 9% on the day. Should be illegal. Okay, let's have a look. FTAI. So I'm guessing you're talking about this one here. Look, the good news is it's sprung back. It recovered very quickly from that. We do have some issues here with these last few candles, but those candles are in a pretty awful broader market. I think this one's still very much intact. I'd be full risk position on this one, and really only until we sort of next big black candle. Very, very concerned because it's confirming this peak now. Okay, and then beneath that. But I know, obviously minus 1/3 might be that candle. Next 1/3 here. That might be 2/3 down there, but I still see full risk position here. Look, it is frustrating, certainly when these external events occur, to change our charts. There's nothing we can do about it. We just have to suck it up and believe that and trust that more often than not, that doesn't happen, and it frustrates us when it does, but more often than not, that doesn't happen, and we've got to proceed on that basis. The good news is we have a plan. We can look, and I will change the screen here and go back to here. We can look at a chart like that, and we can say things like I did on this morning before the market opened, and I hope you saw that tweet where I said, look, that's it, zero risk position. Move on. Like it's dinosaurs and meteor stuff, right? Species ending event, zero risk position, move on. And you would not have looked at it after you got out that morning. You wouldn't have looked at it on any of these days. And that's it. The Droneshield, the excitement and the enigma of Droneshield is being left for the chat rooms to continue to debate, and for the people that got stuck in it to bitch and moan and groan, like I did about that particular journalist and those fund managers. But to do that, ladies and gentlemen, is a complete waste of your energy, and it's way more emotional commitment than you should ever put in to your trading. Yes, Matthew's saying he's still FRP on that FTAI. So I think you're on the right track. All right, on that note, really fun session today. I enjoyed it. Thanks for coming. Don't forget that everything we've discussed is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this stuff, consider it carefully in light of your personal requirements, or seek the help of a financial professional. We have discussed how risky trading can be at times, and you could lose money. Everything you do is your fault and not mine. Apart from that, it has been an absolute pleasure chatting with you today. All the best for your trading. Until we catch up again. Bye-bye for now.